All right. Let's do a quick analysis of Bitcoin as I see it. I expect to see over the coming week. Um, all right, we're looking at a daily chart. Let's zoom out, and we have come a long way. All right, so this was March 2024 through October 2024. Then we had to move up, and then that was that was when was that? November 2024 through April 2025, which really had two phases to it. There's like this phase here, and then we broke down this phase over here before breaking out, going sideways a little bit again around. This is from, let's say, that's about until July. No, sorry, beginning of end of June, July. What was the start of that? May through June, really. And then we had this breakout to the upside just recently. What can we expect next? So I'm going to zoom in here so we can see this more clearly. We broke out, wicked up here on this on the 14th of July and came back down. So we divide. ICT teaches that wicks should be treated as gaps, and we will retrace into the gap, but we're respecting it. So far we have not even moved above the 50% of this wick yet. So what we do find is that we're in a range. We're in a trading range between these two, right from here to there. So this is the low. That's the high of the range, and we haven't gone outside that range yet. And we're going to obviously have to go outside that range at some point, but not yet. Another thing to notice is that on the daily chart, we really are really quite tight consolidation. We have, like, let's say, for looking at candle bodies, we have from there and up over there, and the subsequent candle bodies have stayed within it. We wicked up above, taking liquidity above the previous 2 days on this day, came back down, but we closed with inside the range of this thing, of this body, of this candle here. Next day we didn't quite make it out above there, but we also staying inside the body range of these two. We'll go to a lower time frame and we'll see a little bit more clearly what's going on. All right, now we're looking at the 12-hour time frame, and the reason I'm going to the 12-hour time frame is because it's very close to the daily, but in terms of the time, but we can see a little bit more detail that we can't yet see on the daily, and that is that on the 12-hour, notice how this leg up here, the open of that leg is over here, and we closed below that. This would be called a change in state of delivery. This was the last bullish move up, and it wasn't countered by any kind of real continuation, but there was an expansion up followed by an expansion down, which indicates likely reversal. After that, we had a push up, but we didn't go above this leg down. We didn't even really go above the 50% mark, I don't think. Let's measure that right now. Let's get, no, sorry, yeah, here we go. So if we look at the top of that range down here, yes, okay, so we did go above, we wicked above 50%, but we haven't closed above 50%. So I'm measuring the dealing range from this high to that low. So we've retraced back up, but we haven't closed above the, let's check the OTE setting to see what percent, if we got up to 79%. Okay. Wait, what just happened there? Sorry, let's undo that. Okay, it vanished. Hold on, let me pause. All right. So measuring the range from this high to that low, we did retrace into the optimal trade entry settings of between 62% and 79% retracement, coming just about to 70.5%. But the bodies have remained quite distant. So again, we have this last bullish leg up, but we followed it immediately by an expansion lower, where we closed below the entire leg up, creating a change in the state of delivery, a bearish change in the state of delivery. After that, we've moved up and we've kind of been chopping sideways. Let's also look at this. Oh, this is a daily. We'll go back to daily for a moment just to look at this inversion for value gap. So here we have, as part of this leg up on the daily candles, we formed a bullish fair value gap, a BISI. But then after that, we closed below it on the next day, making that a bearish inversion for value gap. And after that, we've just kind of chopped through it sideways. Going back to the 12 hour. Now, the way this works is that if if price is going lower, you really don't want to see price spending much time in the more distant part of the most recent move. So that's what we see. Actually, let me see how it looks on a 12 hour, right? Um, I'll, this, what I'm explaining now is more easily seen on the 12 hour. So this move down, as I said, we've mostly opened and closed with a few wicks up into above 50%, the equilibrium, mostly spent our time on the lower half here. We've closed above the inversion, which theoretically could mean it's a reclaimed BISI, making it more bullish. However, look at that big wick, and then the next day, big wick, and then we close below it with a wick. So we're really chopping sideways. The direction isn't very clear, but we're not seeing any signs of bullishness on the daily or on the 12 hour. All right, let's go down to the 4 hour. Now, if we were going up, we would want to see some BISIs, some buy side and balance, sell side inefficiency, bullish for value gaps, in other words. But again, we haven't seen, I don't think we've seen any. Let's look through it carefully since we moved down, right? In this leg up, we had a BISI over here. This third candle, we wicked into it, rebalanced it a bit, and then pushed up higher and higher. Okay. Plenty of BISIs over here. Even over here, we came down, we closed just slightly below it, but then the next candle closed above the recent one. That means we're likely to continue higher. We consolidated a bit, but we didn't go back to these lows. Respected that, right? Because we're really just looking to go higher. Now, notice what happens over here. We're slowly moving higher inside this consolidation. We wick lower here, all right? Close back up, close back up. We have a bullish 4 hour BISI over here, bullish for value gap between those two candles. Okay. Over there. You don't see it as a color. It's not color because it's already been blocked over, covered over. And then we move up. We wick down into it. That's called an institutional order flow entry drill, a bit of a wick into a fair value gap, and then reject from there, which is a sign that aggressive move is likely to coming next, which it did come. All right. Again, we have a BISI over here, a 4 hour BISI. All right. Wicked into it, pushed back up. Right. After doing that a few times, we had the last energetic move on these 4 hour candles. Then we came down, making that change in the state of delivery on the 12 hour candle. Right. But, right, that's closing. This candle closed below. We see it clearly on the 4 hour as well. And since then, not one buy side imbalance, sell side efficiency, not one. And I've been saying this for a lot of the last week to you guys. No bullish for value gaps here. There's nothing between these candles. There's some movement up, but it's not, it's very, there's no energy here. It's just kind of like, let's go for a walk, right? Up and down. But now we also didn't have SIBIs until here. Well, we had, after this move down, SIBI over here. And this, I think, was Thursday or Friday. Yeah, it was Friday, 8 a.m., 4 hour candle. And then followed by the next one, the 12 noon candle. That's what formed this SIBI, and we've respected it since then. All right, we have not had a close above it. We wicked above it once, but we have not closed above it. Now, one more point, even though we did have a bit of a retracement, right? Again, what we did was this was a retracement into optimal trade entry territory, which would be, this is the from up here to down here, that's the dealing range, the most recent dealing range that we're inside of. We've come back up to between 62 and 79%, which is an optimal trade entry place in many cases, which would mean that would be the optimal place to go short when price. And notice how that's exactly what happens. Notice how it also overlaps with a very important 4 hour SIBI over there. That's often the case. So price came back up into there, And then notice this as well. Yes, over here we pushed up and we pushed up. Okay. But we never closed, we didn't have any bullish close above a leg down until over here. But over there, again, we just wicked into this SIBI, and then the next candle did not have any follow through. To the contrary, the next four candles came and formed another bearish change in the state of delivery on a lower time frame. Because remember, this was on the 12-hour. This is now on the 4-hour, where we had a bearish change in the state of delivery from. It's got to be a way of making that smaller, right? Don't know how to do that. All right. So from below this, the open of this leg, this candle, and that leg, more series of candles, closed below it. And yes, over here also we retrace back in, and we're going sideways into the SIBI. But let me show you a little bit. I have not measured this yet, but I would not be surprised if the distance from this high, and this is this wick goes slightly above this one. We can measure that. The high on this candle, the numbers at the top, is 119, right? Right. Look over there, right? The high of this candle is 119,567, which is slightly above the 119,560 of the candle right before it. So it did take out some liquidity above. And then we came back down. Now, so this is like a small dealing range. And look where we go. We wicked up right to the beginning of the OTE range this time, and maybe we'll come back up into this range, and maybe we'll even go a little bit higher. It's possible, but everything that I'm seeing is pointing to lower prices before we go higher. But there's one more thing to understand, and that is that almost always before price goes lower, it's going to go higher, and before price goes higher, it's going to go lower. So if you look, I just zoomed out a little bit. If you look over here, for example, right, we were consolidating and we're getting ready to go higher. What happens before we go higher? Okay, hold on. I'm going to turn off the magnet there. Right, what happens before we go higher? We manipulate lower. This is called manipulation. Consolidation or accumulation, manipulation, and then distribution. Okay, consolidation or accumulation, right? And then we have a smaller manipulation. It's not always huge. It depends on what's happening. Also, we just had this manipulation, right? And then distribution upwards. So it's very likely that there might be some manipulation, although it could be that we've already seen the manipulation. Where would we have seen the manipulation? Well, first, we manipulated lower over here. Okay. And it's kind of like the price likes to take, I'm going to take this off so it's not, so we can see more clearly. I'm going to take this off too. Right. Price will often like to wick out both sides or sweep liquidity both sides before making its real move, because that knocks out the buyers and the sellers who don't understand what's going on. Over here, we manipulated lower, then we moved higher, came back into the range. Again, probably we can, probably in the roughly the optimal trade entry, right? Because if we're going longer, see how it comes down to 62%, just a little shy, but it's below 50%. So it didn't quite make it yet, although over here we did. So it could be that we're now going to go higher a little bit. We came to the, right? And then that could be a manipulation. I'm just showing you how this is fractal and it happens again and again. So we came back up to forming another small range here, came back inside into the beyond the equilibrium, almost to OTE settings, move back up, and now we're taking liquidity above this level here, right? Right, we're taking out liquidity above these highs over here. So that's a manipulation above before going lower. So really, I don't know if we need more manipulation before we go even further down. But this is kind of like we've taken from both ends, and often price will manipulate first in the direction that it's ultimately going in, and then second in the direction that it's away from where it's going. And I expect and do not trade based on my analysis alone. You've got to have your own decisions, your own stuff, but do not just take this as a fact. This is not a fact. This is one man's observations, and I do not claim to have this all figured out. But one other thing to keep in mind is that if we look at the dealing range from, let's say, from this manipulation lower here, right, from here up to here, we are still well into premium. We are, we're not like, it's quite likely that price is going to come down. I'm going to mark here this is 50% of the dealing range that we just came up from. And this is 62, right? I'll just mark it like that so we can see it differently on the next time frame. And this is 62%. That's the beginning of the optimal trading, OTE, optimal trade entry. All right, now let's see what happens when we go back up to the daily time frame. And what we see here is that price manipulated higher, chopped sideways, right? We have this range here, okay? And we manipulated below it, manipulated above it, and we're probably going to move up a little bit and then come lower into this BISI, this buy side imbalance, sell side inefficiency, because looking things from a higher time frame, we almost certainly need to manipulate lower to rebalance this imbalance before price is free, to go higher. So hope this was helpful. Do let me know.